Most people think you need $10,000 or even more to get in the game. And if you've been scrolling through social media, you've probably seen traders flashing huge profit. But the truth is, you don't need 10,000 to start trading. In this video, I'm going to break down the real number you need to start trading, how to grow with a small account, and the mistake to avoid so you don't blow up your account. Make sure to stick around until the end because I'll also show you exactly when you should think about scaling your account up. A lot of new traders think they need a big account to start, like 10,000, 20,000, maybe even more. And I get it. You see a screenshot of people making $1,000 or even $5,000 per day, and you feel like you need a lot of money to make that kind of money. But here is the reality. Most beginners lose money at first. So if you start with 10,000 and you don't have the discipline or a strategy, you will lose it just as quickly as if you started with $500. The size of your account doesn't protect you. Then if you don't need 10,000 or 20,000 a huge account to start trading, what do you actually need? Well, let's flip the question here. Instead of asking how much money do I need, you should ask yourself, what skills do I need? There are two skills every trader must have: discipline and risk control. Discipline means sticking to your plan, not chasing any trade, and not letting your emotion run your account. And risk control means never putting too much on the line in a single trade. You have to have a strong risk management. One of the most common risk management rules in the industry is risking 2% of your account per trade. It sounds small, but here's the point. Trading isn't about swinging for home run. It's about surviving, staying in the game, and letting your edge play over time. It's all about compounding your gain over time. Now, let's talk about starting small. A small account is actually your best teacher. Like, think about it. Would you rather learn with a $500 account or a $10,000 account? When you make mistake while learning, it will be way much cheaper with a small account. So if you're starting with a 500, 1,000, 2,000, 5,000, here's what you can do. Make sure to have a max risk amount in mind when taking the trade. You have to know exactly the maximum of money you're trying to lose in a trade. If you're super new, I would say you can practice some paper trading just to see how your platform works. And also, if you want to practice some strategy, you can actually use paper trading, do some simulator trading. But if you trade live, I would definitely emphasize on this. Focus less on profit and more on habit, like journaling your trade, reviewing your setup, reviewing your trade, learning how you react emotionally when you take the trade. Because that's where you're going to go as a trader. The habit you're going to build as a trader, that's why it's going to make you money, not really the strategy. The strategy is just simple. Why? Because if you have the right strategy and you have the wrong habit, you cannot take advantage of that strategy. The goal with a small account isn't to turn 500 into 50K overnight. It's to actually build skills, build the confidence, and learn how to trade like a professional. Because what makes a small account really powerful, you don't have a lot to lose. So your emotion is not all the way there, but it's a training ground where you can go and build a habit that you know, okay, if I can grow a small account, like let's say you can grow a $1,000 account to a $3,000 account, that's a huge account growth here. And if you can do that with a small account, then there's a higher chance you can do that with a bigger account if you were able to build a small account with the right habit. Because sometimes you can grow a small account from 1,000 to 10,000, but because you didn't do it with the right habit, if you have more money, you're going to lose it because you don't have the habit. You just got lucky. You have no process to replicate to do that with a bigger account. That's all it is. That's why a small account is really powerful. I know you guys always want to know, okay, a small account is fine, but when should I know when to scale up? So here is the sign to know when you're ready to scale up. The first one is you've been consistent for at least 3 to 6 months. Because in that time period, you have enough time to build the right habit, to know what's work, what doesn't work, and be able to actually replicate that over and over again. And if you have consistent results, so you know that you can actually scale up. That's the first sign. The second sign is you can follow your game plan without breaking any rules. That's where the discipline comes from, right? You have a game plan and you can follow it, because if you scale up and you're not able to follow a game plan, the higher the amount of money involved in the trade, the higher the emotional involvement is in the trade. The emotional roller coaster is more violent when you have more money involved. So make sure you can follow your game plan. And the third sign is you find your risk management boring. You know why I say boring? Because there's no much excitement about how much you're gonna make or stuff like that. So your risk management is really set. It's just like you should do it over again. It's just boring. It's like, oh, I'm just gonna risk 200. If it's a loser, I'm losing 200. All right. So that's like it gets to get boring. You don't have to worry about like how much. Oh, I'm gonna take a big loser today. You have a boring risk management. If you can check all those boxes, then it's time to slowly add more capital to your account or add more capital to your position size. Notice how I said slowly. Don't jump from 1K trade to 3K trade or 1K trade to 2,000 trade in one shot. Or you go from having an account size of 1K and now you have an account size of 10K. That's 10x. It's a different stake. You have to actually do it gradually. Maybe if you have a 1K account, you can go from 1K to 2K or even 3K. Let's say even if you have more money in your bank, right? It doesn't matter. You start small first and make your mistake, because at the beginning you're gonna make mistakes and you want your mistake to be cheap, not expensive. Selling should feel natural. You should feel ready, not forced, not because you want to make more money. You should feel ready in terms of your skills. Now let's talk about expectation. So trading is not a get rich quick plan. With a small account, you are not going to quit your job in 6 months, and that's okay. The goal at the beginning is survival, not massive profit. You have to think long term. You can go 2 to 3% per week. That compounds massively over time. For example, $1,000 account growing just 2% per week can double in less than a year. It's slow at first, but once you master the process, adding more capital and combining your gain start to snowball, and you can go from like a 1K account to a 10K account really fast because you have the right process in it. But you have to focus on the process, and the goal isn't to quit your job right away. You have to focus on building the skills first while having the right expectation. Before we wrap up this video, let's go over a few mistakes beginners make. The first one is starting too big. They put all the money in a trading account hoping for fast profit, and what happened, they end up blowing up the money because they don't have the emotional resilience, the strategy, the system to grow the money over time. The second mistake is over trading. Traders with small account tend to trade a lot. That's because when you have a small account, it usually push you to trade too much, chasing trade here and there because you want to grow your account really fast. Because it's small, you want to have a big account, so you're pretty much more excited to take more trade over again. And the third sign is ignoring risk management. So when you have a small account, it's really common to see traders to risk like 20, 40, 50, sometimes even 80% of their account in one trade. That's the quickest way to blow your account and have your account go from 1,000 to 0. That's one of the most common way new traders blow their account. And the last part is journaling. If you're not tracking your trade, you're not gonna be learning. So if you take your own trade, make sure you go back and try to check your entry, your exit, and reflect why you decide to actually enter the trade and why you're able to follow your game plan. You have to journal your trade. If you're a beginner, if you can avoid this mistake, I promise you'll be ahead of most beginner traders out there. And even most people will be trading for 2 or 3 years as well, because most people are not able to actually, they've been trading for years and they're still making the same mistake. So here's the bottom line. You don't need 10,000 to start trading. You can start with a small account, even 500, as long as you can focus on discipline, risk control, risk management, and building your process for consistency. Once you prove consistency, then scaling it up is just math. You can actually add to your capital, revise your risk management, and you'll be good. If you find this helpful, hit that like button, subscribe to the channel, and let me know in the comment how much did you start your trading journey with. I would love to hear your story. See you on the next one.